So, first topic for discussion. Cultural change, and what do you think is the number one challenge that companies experience embracing digital transformation? Obviously, dealing with transformation and it requires driving cultural change within an organisation. Charlotte, you must have had experience in addressing this challenge, managing resistance to change, showing people the bigger picture. What are your views on that question?
Probably could keep going for half an hour here, but I'll try to keep it short. So just my background, I did 2 startup exchanges for NASDAQ. So it's quite interesting putting together 2 startups from a piece of paper all the way up to a fully regulated exchanges, but working for a US-listed company. Some pros and cons there. And that was quite a progressive US-listed company. But also from my new hat of Innovate Finance, we obviously have membership can be anything from a 2-man startup all the way up to US investment bank, and everyone sits around the same table. And this is stuff that gets discussed all the time, is how do the US investment banks emulate the 2-man startup? Has the 2-man startup managed to sell into the US investment bank and all the people in between? For me, you have to embrace that cultural change. We've been through that, what I call the suspicion phase, from the large financial institutions. With fintech, they are now in desperate catch-up mode. You could say a lot of them are between the acceptance and the embracing stage. And many of them are talking to us about how they can use the membership of Innovate Finance to help them look at the challenges there, how to bring fintechs into the banks. And for all of you who have been through the torrid process of procurement from going into a bank, I've just said I've done it with 2 exchanges myself, so I'm still tarred. I'm actually 21 years old, but I might not look at that. It's how do you understand that? And I was having a conversation with a couple of the CEOs of banks last week, and I said, do you realise the trouble you have with procurement of going through your process? And it was actually quite a surprise to them at CEO level. Now, I'm not saying that the Shoreditch hubs and the innovation labs don't understand it, because they absolutely do, but you've still got this mismatch across the banks. I think Justin said earlier, you've got to embrace that from day one. You've got to embrace it from the exco. And where we see the most efficient banks working in this space is people who are actually discussing how to change it, not just the process, but how do they change the whole culture of the bank. And once you're there, you are a good 50% of the way on the way to the journey, in my view.
At board level and exco level, I mean, there will be people that have been around the block 2 or 3 times, must be absolutely petrified with the rate and the amount of change, and just think to themselves, we are so set in this direction on our big cruise liner that is it worth actually making the change rather than just sticking to what we do, even if that is not heading in a great direction?
I think that was the case a couple of years ago. There was definitely the ostrich approach, put our hand in the sand and fintech will go away. Meanwhile, managed to put AWS and Google across all the banks. But I think now what we're seeing is obviously they are definitely on that journey and they're playing catch up. Some are a lot better than others. And where it's discussed at the board, you are seeing that filters through the rest of the banks very, very quickly through the management levels, and and all the way back to the actual person doing the procurement, where the board maybe in need of a bit of a refreshment, should I say? Then it's a little bit more of a challenge, and that does resonate through the teams.
And so, Alex, a challenger bank.
Yeah.
But could we, talking about going around the block a few times, we say Metro Bank has been round the block once. It's not a small startup that can just change direction at a whim. How does it? It's been through some phases. Where is it now? Are you seeing things start to clog up? Is there still a culture to move and innovate?
Yeah, so I mean, if you think about the context of Metro, we started about 8-9 years ago. It was a store-based model. We've probably come relatively late to the digital transformation part. If you compared to major banks, I mean, most major banks were kind of investing around 2011, all the rest of it. We really got started in earnest 2.5 years ago. And with that comes everything. Charlotte's reference. There's a culture change. There's an exco view of what that means in the business. So I would say we are part way through that. We're making the cultural changes. We're investing heavily in digital. I mean, a few things I would say. I think that particularly when it comes to exco and stuff. I mean, there is a sense of yes, you need those people to buy into it. I think the mistake that people always make is that they go to kind of a board and they very much play this software's eating the world, the sky's caving in. And that kind of freaks everybody out. And in some respects, it's silly as well, because it's actually not a reflection of what's actually happening. I mean, if you looked at any bank, or Metro, which is a relatively small bank in the UK, any traditional bank, the reality is there's a core model that works. And it's not about wholesale change and innovation. It's about picking the battles and fundamentally figuring out, and this is the hard bit, where do you think ultimately you've got comparative advantage over the long term? And so that's the much harder thing to figure out. And so, yes, you've got to get, Exco buy-in, but I've seen people go there with this, you're going to be out of business in 5 years mentality, and I don't think that's borne out to be true. So I think there's definitely something about, how people manage that and get people on board. I think in retail bank in the UK right now is probably about the most exciting time to be in it. I've been around it 10 years. It feels like we are on the cusp of some genuine change. Things like open banking and stuff, we're kind of laying the foundations for that. So, maybe mistakes were made in the past, but, what industry hasn't? It's all about looking forward, I think, now.
And by virtue of being 8 or 9 years old rather than 108 or 109 years old as a financial institution,
yeah.
The change that you've been going through in the last couple of years, has the virtue of the youth of the business, has it helped or had an impact on that process?
I think in some respects there has been a bit of a last mover advantage, because you've seen what's gone before, you kind of know what works. But quite frankly, I think the big advantage has been the tech stack. We're not mired in this legacy of, multiple acquisitions and mergers over time, and therefore you've got, 10 different customer data systems. We've got a very clean tech stack. It's architected in a very modern way, and that over time is what's going to pull us through, I think, and, get us ahead of the pack. So there's definitely an advantage just in terms of, the technology and where it's at and adopting best practice, I think.
Okay, I think that's a good point to bring you into the conversation, Pullen. A little bit of a description of nCino, its launch into the European market. Perhaps touch on the culture piece and then the nitty-gritty of tech and data and regulation.
Sure. So nCino is just about to celebrate its 7th birthday. We are a cloud-based bank operating system built on top of the Salesforce platform. So we're Salesforce's primary banking partner. So products you might originate, loan, deposit, anywhere around the world, banks use nCino for that. We have about 250 customers around the world today, some small banks, some very large banks. So we're obviously in very heavily regulated markets. So these issues that Justin mentioned and my fellow panelists mentioned are things we think about all the time. So in terms of culture, I thought the stat of 46% say that culture is what holds folks back in terms of adopting the change of digital transformation. In our experience, I would say that number is probably much higher. So we see people deciding, regardless of where we are in the world, Europe, Asia, the US, we see that people deciding that they need to do something and they like ours better than somebody else's is really not the challenge. The IT organization, somebody deciding that it's threatening to them is really the biggest challenge. It's not about whether or not it's the best new tool. It's whether it's the right time for the tool, whether it's the right time in the budget cycle, whether they feel like they can actually benefit from what the software will do is a much bigger challenge than is it something that they ought to do.
So what does that mean from a sales and political perspective? Do you find out who their boss is?
So I see both sides of the conversation, right? I mean, it sort of depends on the bank. In our experience, if you start too high, then you may have challenges with the folks who are actually going to do the work and be the people that are going to drive the change. At the same time, the people that are accountable for those decisions are pretty high up, right? So you've got to make sure that you do stakeholder management up and down the organization, or at some point you're going to have problems.
Digital risk a massive issue, and again, this understanding at the board level of how risk is being managed and digital tech risk, security. If I was sat on a board, what piece of paper, what number, what stats, what description of what is going on gives you comfort, and these are the issues these are the hurdles that you have to overcome.
So
I'm not sure if that was a question or a statement.
Well, I think it's a good topic, right? I mean, from an nCino perspective, we benefit tremendously from the fact that Salesforce is a massive infrastructure provider. So they have to adhere to the standards, basically, of every regulator in every market. So we don't have to build that infrastructure or that regulatory compliance because we just inherit it, right? We do a little bit more on top because what we do is specific for this market, but it is something that's front and center, and you can't get away from it. I mean, it's just pervasive in every conversation that we have.
Charlotte, is there discussion among your member organisations?
Yeah, it is, and and a lot with the regulators as well. And I hear extreme stories of some startups who have maybe based in a WeWork office who then say that the bank who's trying to onboard them won't onboard them while they sit in a WeWork office because of data security. So it becomes quite extreme, and then you feed this back to the regulators on behalf of the members who said, "Well, I never said that." So I think a lot of the cautiousness sits at the bank level, and nobody wants to be the person who puts in new technology that then blows up the bank. So that's the challenge: is how do we find the way to navigate that? And the FCA's gone some way in doing that with the regulatory sandbox, is finding that safe place for people to come in, use data, test the products, and work out the viability of that. And and I was in the US last week, and it's amazing really when you speak to some of the US counterparts in fintech and even the VC community of how much they respect the work that's been done by UK regulators in this space. And and to the point where even they would consider investments as more viable in UK fintech compared to the US because of the regulatory landscape. So I think we've done a great job in here of recognising that very early on and working very closely with with the banks, with the fintechs, with the investment community to try to bring this innovation in. And so I was quite shocked at how scathing they were of some of the US regulators.
So as a vendor from a product perspective, we don't guarantee compliance. What we do is we give the bank the right tools to remain compliant for the lines of business that we support, right? So it's a slightly different nuance where we're not actually codifying rules into the software. So it's a highly configurable piece of software so that if the bank's interpretation of a rule or law or a guideline changes, they're actually responsible for configuring it in the application and then putting it into the field. So from a product perspective, that's sort of our approach to it. But at the same time, we have to be cognizant of things that the market requires. So if for example, there's a new FCA rule, if we don't provide somebody with the ability to remain compliant, then the market simply can't adopt the software. So we absolutely have people in our product organization who pay attention to this stuff all day long. So it's just a fact of life in the space we play in. I mean, if you can't ignore it, you have to be all over it.
Does that create awkward or interesting situations where you may be speaking to clients and you feel that you're more on top of regulation than they are?
So I think you have to listen to their point of view and understand why they've interpreted something the way that they interpret it, and then you've got to sort of show them how the software will actually allow them to do what they think they have to do. So the interesting thing, and I don't know how the rest of the room or the panelists feel, but if there's a particular rule or law, most of the time, if you showed the same piece of legislation to 5 different banks, 3 or 5 of them are going to have a different way of enforcing that in the field. So our point of view may be different than yours or yours, so we've got to make sure that we can accommodate all 5. So there's flexibility that has to be accommodated for in the products that we bring to market.
And is that a similar approach to when you've launched into Europe? Obviously, there's EU regulation, but there are different interpretations among the regulators.
So to Charlotte's point, it is absolutely more stringent here in terms of operating in the UK and in Europe than it is in the US. So the topics are just more there's more overlap, I guess, in the interpretation. There are more jurisdictions. There's more regulatory involvement. In the U.S., there's one regulator, maybe 2. The data centers are all in the U.S. You don't have to kind of come in and out quite as much. So in our experience, getting products launched and getting adoption in the market we play in Europe has been more challenging.
Okay. And does that impact on how you work in the U.S. or?
So things like open banking and GDPR have now found themselves part of our core product, which is launched around the world. So there is thought leadership here in terms of the way we manage data protection and things of that nature.
I mean, the issues tend to arise when regulation comes into play that doesn't seem to fit in with an organisation's best practice way or supposed best practice way. If regulation is there to drive good governance behaviour, best practice, but it's when you get a disconnect from that. Is that a fair point?
Yeah, I think that's fair. But I also look at UK retail banking. I've said it for a number of years. It's highly balkanised in terms of how people do stuff. If you gave me a choice between enforcing PSD2 or thinking about harmonising how we do KYC, AML across banks, I know which one I think would have a bigger impact. So I think there's, and in that regard, do I think banks do enough to kind of force that agenda and point out where there is genuine opportunity for transformation? I'm not so sure. So, there's the default mode is it's regulators doing stuff to banks. So I tend to think about it a slightly different way. I'm not so sure banks do enough to really, get the right agenda, which is right for everybody.
What is pushing organisations forwards? Is it innovation? Is it regulation? And does that change if you're at the top end? Can you move as quickly as far as customers are concerned? Sure.
I think well, innovation and competition for sure. When we look at fintech, and people say, well, "What is fintech?" The US seem to call it tech fin more than anything actually, which I quite like. But I think it's more fintech is embedded in every part now of finance. So whether your Apple Watch gives health data that allows you to do health tech, or insure tech, or reg tech, or any other part of tech, and I think that's what's so interesting now, is people have very much used fintech as the springboard into what else can be changed using technology within it and embedded finance. So we talk a lot about green finance or cyber. What would happen if you have a nice KYC utility, which is holy grail, and what can you do on the back of that? So that's where I think the pace of change is coming through, is people have almost accepted fintech and big tech is coming in to disrupt this market, and it's now the race towards how much you embrace that and then move beyond that. And that's what we're seeing, quite a big change now, is just seeing it in every single part of everything you do. And I talk a lot about tech as an enabler. Any child can kick a football around the ground, and any kid can also use take the smartphone and use tech. And so the rate of change will be coming very quickly. Is that going to take away jobs? No, computers didn't take away jobs. They generated jobs. And the same with AI. Some of these roles will go to AI, but you're going to see the pace of change coming through. So I think it's more, people have accepted it's coming, are embracing it, and the competition in financial services, in my view, is accelerating.
Top tip for a company looking to embrace digital transformation in a regulated industry before we open up to Q&A. Alex?
If I was to, think of one thing that, people may get wrong, is that I think not enough people think about, what the end game is. And the easiest thing to do, the digital transformation, is spend a lot of cash, and in the end, you look like everybody else, because it's so mimetic what's going on in some respects. So I think you've really got to, when you think about digital transformation, you've got to think about, for your brand, your business, where can you get comparative advantage? You're not going to be able to do everything, and it's therefore having that end in mind. Otherwise, I think you end up in this place where you've invested a lot of money, and actually you just look like everybody else. So I think, spending more time thinking about that before you go down the journey is definitely something that's worthwhile thinking about.
Thank you. Pullen?
I would say focus on a differentiated customer experience. So that's what drives our product organization and the way we go to market. So to your point, Alex, if you look across the market, a lot of things sort of look and feel the same, but they're not necessarily differentiated. And I think part of what's made nCino at least somewhat successful is the fact that we do offer what I think is a differentiated customer experience. So that would be my primary piece of advice.
Thank you. Charlotte?
Obviously, goes without saying all of those, and I do think as well, putting a diverse team together, backgrounds, of ages, gender, is really, really key. There's some great thinkers out there. People say to me, what does a person look like in fintech? And we rattle through, talking to universities, saying, is there a fintech degree? What does a fintech person look like? A fintech person could be anything. It could be a finance person, it could be a tech person, a marketing person, HR. It doesn't really matter what background it is. And what you need to have is make sure you have got some good brains across the room. Looking at that, if you look at my team, it's really, really diverse in backgrounds, in age, and having people around that who just challenge the way you're thinking all the time. Ideally at board level, but as you say, it doesn't just be the board level. Throughout the whole team, there are some great minds out there who want to embrace innovation and competition, and if you can bring them together, you're going to get there probably faster.
My question is to all of the panel. In the context of a regulated environment, what advice would you give to a fintech selling into a global tier 1 bank?
Yeah, I mean, I would definitely say on the money journey, I would say, a slow maybe's a lot worse than a short no. You have to be, everyone who tells you it's going to take you 6 to 9 months, double that and be hopeful. We're not quite there yet. We are trying. We try to push it a lot. I think, as I said, the banks are certainly in listing mode now, but it's a long, painful journey. When I set up the exchange, my second exchange I did, I had 70 signatures to gather at one bank. I won't say who that is. It was quite large, and that takes quite a long time. So the day you get your product approved and somebody says, yeah, we're good to go, you then normally start the signature process.
I would imagine in that example, there would, out of those 70, many of them wouldn't have known each other or what they did.
No, and it's when you cross the different departments, because obviously you'll sit there and you might have started at product-led, which, I think you've got to get the business on side. If you're going down more the market structure or even worse, the principal investment team, trying to get those teams together and discussing it is incredibly hard. And you get founders who are so excited because they've got someone really buying into it, and then 6 months later they're still waiting for it to happen. So it's a little demoralising, but I think it's getting a lot better, and there's some really great work from the banks at the moment looking at some of the common standards, how they can sit there and make that easier for the procurement process. So don't give up.
You raised a really good point when you mentioned that you have preferences within your platform to be able to allow organizations to interpret and configure specific to them how they should be using your technology, which is fantastic, obviously, for differences in geographical regulations and obviously personal interpretations too. But to what extent do you find that your clients are actually coming to you for expertise in configuring this as opposed to actually configuring themselves and using it? And actually, perhaps to the other panelists, to what extent do you rely on experts to help you in those decisions also?
That's a great question. So when we come to a new customer, when we start a project, we come with about 80% of it already pre-configured out of the box with what we consider to be nCino global best practice. So that's where you start. It's not a piece of white paper and, hey, what's your dream target operating model? But really, this is what your peers are doing elsewhere. So let's overlay that with the way you want to operate so that the level of effort is not, let's start from scratch and build, but instead, let's start with what works elsewhere and then tweak it around the edges for what might be unique about that particular bank. So that's really our approach, is come in with best practice, with what's been widely accepted by your regulator and other institutions, and then see how that goes.
So do you have to be careful about how far the line you go about talking about what peers do?
So we say, this is nCino best practice, and it's a true SaaS model, right? So everybody subscribes to the model, everybody benefits from the others. There's not a whole lot of uniqueness in terms of the actual code deployed to the customer base. Everybody uses the same baseline code. So we do have to be careful, and we don't obviously share, bank to bank, but at the same time, we do, as a company, benefit from the learnings across the customer base. So that's what we fold into what we consider nCino best practice.
What areas of regulation would you like to see more innovation in, and why? Or what has the most potential?
For me, I mentioned it. I think it's the whole KYC, KYB, AML thing. It's in many respects a huge time sink for banks. It's hugely expensive. It doesn't really serve the customer. You can open an account at one bank and then go down the road and open another one next week. You've got to go through the whole process again. There's no data sharing between the banks. Everyone rolls their own rules. That, I think, has there's significant work that could be done there. And I would kind of throw into that. I think identity is getting much more important, actually. I think it's, this, growing trend. I think some interesting things to be done. So I think there's something about more, portable identity. So if you take like Canada, for example, you can effectively use your bank identity to interact with the Canadian government. There's things like that which I think leak outside of the banking world, which I think is quite interesting. But it all comes down to, validating who people are, and who's going to hold the liability for that. But I really think, in the next 5 years, you'll see some genuine innovation in that space because it's good for customers, it's good for banks, and it increases, portability, which, I think broadly is a good thing.
I don't know if that means we're just going to all be microchipped.
But it doesn't.
Alex.
But that's what I always say to government. I said, if you call it a financial passport, then you get over some of that issues. You know, the problem is you hear ID, and then man on the street hears ID cards. We have to, it's the same. For fintech to get truly embedded, they really want to go to a, I hate to use the word utility because it's the wrong word, but you need to go to a central place, you need to pull that data and then be able to use that. Because the cost of compliance it's huge for the banks, but they are managing it. For a new fintech to be able to do the same work on their KYC, AML checks, it's quite sizable. And the good thing is there's 10 people trying to solve it, 10 people telling me their solution is the right one. So let's hope. We are waiting for a government to make some move on it. I think not going to come in the next year maybe, but certainly it's that's what's going to speed up the innovation. And the banks want the cost cuts. There's no competitive edge on KYC.